Broker IPTV.
Today we're talking with Doni Dolfinger, a reverse mortgage specialist with Universal Lending. Doni, welcome to the show.
Thank you.
So reverse mortgages, I mean, some people have heard about them in the last, few years and they know what they are, but just for the audience, refresh us.
It's a loan against a person's home that does not have to be paid back as long as they live there. It's not any more magical than that. People tend to make them a little more difficult.
So do I have to own the house free and clear before I can get a loan against it?
No, you don't. In fact, many of our customers over the last couple of years have been using the reverse mortgage to come in and pay off what they owe currently on the loan to eliminate that mortgage payment. So they have a reverse mortgage instead of a traditional loan, but there is no mortgage payment involved.
But there does have to be some equity involved, right?
Absolutely.
Yeah.
Absolutely.
Is there a percentage of that is kind of a standard rule?
Oh, good question. It's not a flat percentage like on a traditional loan. On a traditional loan, you might go in and qualify for 80% of your value. On a reverse mortgage, it's tied to the value of the home, the age of the youngest borrower, and the interest rate at the time they do the loan. So it's different for every individual.
Okay, because I think one of the questions a consumer would say is, well, how much money is going to be available to me?
Exactly. I think a good rule of thumb would be about close to 60% right now based on our interest rates. The older the client, the more they qualify for.
Got it. All right, so is qualifying difficult?
It isn't. You can qualify for a reverse mortgage if you're 62 years of age or older, you live in your home as your primary residence. It has to be free and clear, or we need to be able to make it free and clear with the reverse mortgage. Now, qualifying also does not entail the same criteria as a forward mortgage. So we're not looking to our customers to pay this back monthly. The equity of the home is what's going to pay it back.
Are there different types of reverse mortgages, or are they all one standard kind of model?
In years past, we've had primarily reverses as a refinance product.
Okay.
But now we have a purchase program, which is wonderful. It allows people to come in and actually purchase the home with a reverse mortgage and still have no mortgage payment.
I could see a consumer asking this question, is it possible I could get more than one reverse mortgage?
Only one at a time.
Okay.
So you might be able to refinance it at some point in time and obtain another reverse mortgage, pulling out more equity in the future, but you can only have one at a time. That doesn't mean that you can't have multiple reverse mortgages over your lifetime.
What if you had separate properties?
If you have separate properties, you still have to do the reverse mortgage on your primary residence.
Okay. So you got to say that this is my primary, and
Absolutely.
and that's the only one you can probably do it on.
Yes, and you have to be able to prove that that's your primary residence. The burden of proof is on the homeowner.
All right, last but not least, is it possible for the loan to become larger than the value of the home?
It is. That can happen. It doesn't happen on a regular basis, but we do see it, especially the last couple of years. But if that were to happen, let's say my customer is moving out, they owe $100,000 more than their home would sell for right now, FHA would have to pay that loss. This is a non-recourse loan. We cannot come after the kids or the homeowner. FHA would pay it with the mortgage insurance that's factored into the loan.
Interesting. Sounds like a good option. Thanks. Great
You're
information.
so welcome. Thank you.
I appreciate it.
Find more real estate videos at brokeriptv.com.